Hey everyone, welcome to the latest edition of the Cash Flow Chronicles. Appreciate the time you spend listening to the content put out there and want to emphasize the individuals that we bring on board bring great content and great expertise in their respective field. An exciting one today as I have James Brown, the founder of BKWIRE, a great website that really helps track bankruptcies in more detail. And James, welcome aboard.
Hey, thanks, Matt. Thank you for having me on the old Cash Flow Chronicles here today.
Appreciate having you, man.
Thanks a lot.
I know being featured on one of these things is always a bit uncomfortable, so I appreciate you giving some time. So walk through your background and what made you start BK Wire.
Well, it's never uncomfortable being with you, Matt. Great show. I watch it all the time. I hope you're get more and more users. So thank you again for the time here. And yes, you know what, Matt, if you don't mind, I'd like to share my screen with you
Absolutely.
so we can take a look at this really closer. So basically, Matt, I found a BK Wire. It was an idea I had about probably 15, 16 years ago. And when I started in the trade credit insurance world like you, and I always noticed that bankruptcy information was missing on a corporate level where attorneys, lawyers, and others knew about some bankruptcy events, but the B2B sector was not very aware of commercial bankruptcy. And so like most good agents out there, we were getting our leads from bankruptcy, unsecured creditor events. However, this information was very difficult and very expensive to get. And so we developed a tool called BKWIRE, where we took a look at it, and we have basically four different facets of it, where every day we get the corporate bankruptcies, impacted businesses, which are the unsecured creditors, and creditors matrix, and a watch list. We allow companies to download information into our system, and we'll notify the user if somebody impacts their network. So as you can see here every day, and what the problem is right now is that there's a lot of underlying impacts out there, that economic impacts that are causing quite a few bankruptcies right now that are very concerning. Last year alone, there was approximately about 26,000 companies that filed for corporate bankruptcy. However, it impacted over 600,000 companies out there. The impacted businesses, the unsecured creditors, and that basically, back to your cash flow chronicles. I mean, we're looking at cash flow when a company takes a large hit in a bankruptcy, where next thing you know is, hey, where are they going to get their cash flow? What's going to happen when basically one of their major clients files for bankruptcy and all of a sudden they're owed a bunch of money? And BK Wire provides that information.
Yeah, so having gotten to know you over the past year or so, I utilize the platform quite a bit, and I know there's a number of bankruptcy resources out there that bankruptcy lawyers use and various professionals. So what makes your website a little bit different? I guess that's a good question because I believe
That's
you know
good. I
there's other
mean, it's
providers as
good.
well.
I mean, what makes us different? We spent a lot of time with basically in our focus group with commercial CEOs, CFOs, and the biggest thing we find out there, Matt, is time. Hey, everyone's basically time is very valuable, and there's a couple other websites out there that are terrific, but again, our platform focuses on the B2B sector, not only with time but price too as well. So, I mean, we're providing this data very, very basically economically. However, too, as well, is our basically platform, Matt, and I think you're aware of this, is basically we're really, really focusing on that loss, that unsecured creditor loss, where somebody can basically take a look at somebody and, hey, if you're doing business with Whitecap, and it's a small amount, but now all of a sudden, hey, they're involved in a bankruptcy today that can directly impact you in your network. So we can pull up this information very, very quickly. And what we're finding out is that resources these companies are using, such as like Dun& Bradstreet, CreditSafe, Experian, it's very hard to get financial information and accurate information. So one of the biggest benefits with BK Wire, you can actually see how much credit people are giving. It's hindsight, right, Matt? We're driving basically in the back seat right now and saying, okay, here we got a company that filed for Chapter 7. It looks like an insurance company basically gave them maybe some insurance premiums or we don't know the whole aspect of it, but now you can see these amounts that are going out to these companies. But now all of a sudden it's just like, hey, you got to take a look. What was DNB saying? What was experiencing at the time? And again, a lot of these companies need to reevaluate some things, especially with their larger customers, especially in the private sectors. Hey, maybe we should get financials, or basically look at trade credit insurance, because Matt, as you both of us know, that a lot of companies, as soon as they are doing business with somebody, they're not going to turn away business for credit. A lot of these companies are going to continue doing business with them until the worst case scenario happens. And that's where basically trade credit insurance and other risk mitigation tools help out, where the traditional Dun& Bradstreet and other credit reports in their internal underwriting is not working anymore.
Yeah, I think that's a good point because from my experience, how frequently we underwrite with our proprietary database and tell our clients, hey, we don't support that credit limit. And it'd be surprising how frequently our clients are surprised by that. And we walk through the data because obviously those credit reports don't prove what needs to happen. And of course, we have different variables from that standpoint. So, one thing I think is really cool about your website too is it actually helps us as professionals walk through the details of a bankruptcy. I know there have been some recently from like a merchant cash advance and different variables that the clients I speak to have no idea is even something that basically their clients are faced with. Obviously, merchant cash advances is something that we see a lot in this sector. Is there anything that you can build upon that?
Yeah, I mean, you're asking, or you're making some really good points right now, and basically we're seeing some alternative financing come into play with several bankruptcies right now, and I can share with you one, and we'll go to a company called Savage Poultry, and we can pull up this information again very, very quickly with BKWIRE, and back to, like I said earlier, how we were talking is when companies like, and this is why your company and what you do is so invaluable, is again, you're trying to help a company do a deal, right? At the end of the day, you're going in there, and this is why everybody should talk to you before they get engrossed in a large deal, because our goal is basically, like, we're taking a look at a poultry company. So let's say they're turning the receivables over 20 times a year. We should basically turn these over very, very quickly. And so when somebody walks in, I mean, as everyone should know, some industries, especially this one, is very, very low margins. So when these companies all of a sudden, hey, take a look at credit, and this is why trade credit insurance is so important, and I highly suggest everyone should talk to Matt. It is now all of a sudden that $500,000 credit line, and basically making the margins they do. And if something does happen, the losses now, right? The losses. How do we replace that loss? And it's very difficult to do. So a $500,000 loss, like at the end of the day, these companies may have to sell, $15-20 million to make that kind of revenue up back again, and it's very difficult right now. So in this particular, and I'm glad you brought this up, is in this particular case, one of the things with BKWIRE is we do allow the basically user to get all the petitions, and we followed this case quite closely. And I'm going to share with you right now just like some of the stuff, and we can take a look at this company. I want to make it brief here. So we have a company that basically had about, we're looking at non-priority unsecured claims of 1.3 million, but they had $3.5 million of secured claims. And when we scroll down and take a look at this, and again, we're in a very low margin sector here. And I'm going to scroll down to the creditors who have claims secured by property. So we find out that M&T Bank had a line of credit, obviously, with these guys, and they collateralized themselves with all their assets at $3.2 million. But then now all of a sudden, when companies get in trouble, right, Matt, and I think you're starting to see this too as well, is we're seeing these hard lenders, merchant cash advance companies come in and basically, I learned this terminology here not too long ago. Then we have something called stacking come in. We have multiple basically companies, basically merchant cash advance or hard lenders come in. So then here's this company, this Savage Poultry, that basically then gets a line of credit with Specialty Capital for $14,000. Then follows another one with Global Merchant Cash for another $200,000. and then basically goes to canned capital for $175,000. These don't sound like high, basically reputable lenders, do they, Matt?
I mean, let's be honest with you. It's you really don't know based on the words.
So just imagine, and again, there's some companies your users and listeners, deal with that. Hey, they're good about getting credit. Hey, they're really good about getting credit. And I tell everybody, it's just like, hey, there's guys out there that will do whatever they can to get credit because they want to survive. Some companies just want to survive. And again, this is the benefit to having trade credit insurance. But however, I mean, at the end of the day, a lot of these people have been in business for quite some time. And now all of a sudden, like I said, you can start seeing basically the unsecured creditors, the companies that were giving them credit. But not only that, we're going to scroll down. There's actually the accounts receivable of this company that is involved, and it shows who the Savage Poultry is doing business with, and it's pretty interesting. So you got basically pretty much 3.9 million dollars of basically secured debt. Now all of a sudden, the unsecured lenders are owed over $1 million in this too as well. But now all of a sudden, you start to take a look at, here's this guy's receivables. Okay, talk about cash flow chronicles, man. It's just like at the at the end of the day, and it's like, okay, it's just like, what about his cash flow? And now all of a sudden you have a company that basically had 1.1 million. They have basically some concentration here, and all of a sudden it's just like no one's paying anybody. So the next thing, you put this story together, right, Matt? Now all of a sudden this company needs financing, they need capital, they're going back to their suppliers. Don't worry, I've got a big deal working. We've all heard it. But again, at the end of the day, it's just like, hey, this information is very difficult to get. He's not turning over his financials probably to suppliers, and he got some some pretty big basically suppliers that he worked with that he did get credit with, and you could take a look at these online. Visit BKWIRE. But now all of a sudden you have a story, right, Matt? You have a story to tell your credit team. You have a story to tell your basically sales team. You have a story to tell your C-level team now where, hey, we got to be heads up, and maybe we should talk about trade credit insurance and other risk mitigation products right now, because we're seeing some very interesting losses, bankruptcies, and it may indirectly impact your clients or basically your customers' market, and it will affect you down the road.
So one thing I think is pretty interesting within my network, I ask individuals, do you track bankruptcies? Are you familiar with what's going on in the marketplace as the economy rebalances? And no one enjoys bankruptcy, point blank. We never want to see bankruptcy happen, but we are seeing an uptick in bankruptcies relative to your knowledge, correct?
Yeah, but again, I look at it with all the companies out there, right, Matt? I mean, it's just like there's going to be probably 27,000 companies that file for bankruptcy. Okay, I don't think people go, hey man, we're going to go to business to go bankrupt, right? At the end of the day, and I mean, bankruptcy is very expensive too, right? I mean, there's a lot of companies out there that don't file for bankruptcy and just cease operations and go away, and basically saying, hey, you have a protracted default situation, which I got to remind everybody, does credit insurance cover protracted default, Matt?
Of course.
Okay. Okay. So you have these 27,000 companies, and again, yes, it is up, but you think of it in general, there's millions and millions of companies out there. There's only a small percentage goes bankrupt, right? But however, the concerning part is the unsecured creditors. You have your millions and millions. Now all of a sudden, it's not the bankruptcies. You have probably this year alone, there are probably 800,000 to 1 million companies impacted by a bankruptcy indirectly or directly, saying, okay, great, bankruptcy happened. You got to remember this: the unsecured creditors, the creditors, and this can really affect their cash flow. So now these companies that take these larger hits, larger losses, right, Matt? It's just like, hey, they may be kicked out of the bank. They may have to now get alternative lending, and maybe the path to bankruptcy starts now. Okay, but the thing is, this stuff and this information is very difficult to get. and it's very costly. And a lot of companies aren't going to hire, someone $200,000 a year to monitor their AR. It's just not basically in their books. But at the end of the day, it's just like what BKWIRE does is provide you with this information. Okay, it happens every day, and basically gives you the bankruptcies, but more importantly, it shows you the company's taking a loss. And there's a couple things like right now that trends that you can start following, and it's very, very neat. Where I think going in your area, I like to if you like to talk about really quickly the Sherwood Foods bankruptcy, and just and I'm going to type that in here really quickly. So a company called, and Matt, this $4 billion. This is a perfect example of why credit insurance is so important. Is this $4 billion? If everyone Googled Sherwood Food Distributors right now, it's just this $4 billion conglomerate that basically was very specialized, and they did a terrific job. Basically, just seized operations, and they owe millions and millions of dollars out there right now. Well, last week, Matt, just somebody threw them into involuntary bankruptcy, and BKWIRE does get the involuntary bankruptcy petitions, and we can check this out. So we're going to go ahead and click on it, and you can see Sherwood Food Distributors was thrown into an involuntary bankruptcy, which you need 3 unsecured creditors to start this, and they're alleging, and we can see the unsecured creditors right now. And they're alleging that Dutton Wagner in Virginia, Stampede Culinary Partners, and Ashe County Cheese, they're small amounts, Matt. Okay, they're small amounts that they are owed compared to everybody else. So they initiate this process. Okay, and why it's good to know, like I said, and this stuff. And somebody like Sherwood is so large, and the reach out there is so large of somebody. And I think this is why the trade credit insurance and why BKWIRE is so important. There's so many gaps and voids out there right now, man, where all of a sudden this big conglomerate, Sherwood Foods, owes basically, they may have $250 million on their, basically payables, and they owe all this money out there. Well, there's a lot of these basically regional guys, right, that work hard, that are owed all this money from maybe a Sherwood Food Distributors that should have been carrying trade credit insurance, right, at the end of the day, because now they're carrying these large lines. They're not going to get paid. Now there's probably other people not paying them too as well, okay? So I think that basically you're going to see some interesting bankruptcies right now just due to the economy, and in some other aspects with tariffs and other things that still linger with COVID, interest rates. But now all of a sudden, we're seeing a lot of these companies that have private equity. I'm sure you've been seeing that too a lot, that basically are infused with that are going bankrupt. Now it's just like you can take somebody like Sherwood Food Distributors and talk to somebody like you, Matt, and saying, hey, we should start looking at trade credit insurance. We should start looking to know who our customer is. Maybe we ask for financials, maybe do some things a little bit differently, because our credit reports aren't telling us this at the end of the day.
I always tell people this is the most cost-effective way to manage credit, to be honest, because you take one bad debt loss, and by absorbing 100% of that risk, the credit insurance policy paid for itself. So when you're in a higher risk environment, so you have those larger credit limits with a low margin variable, it really just makes sense to explore and look at it from that standpoint.
Yeah. And I don't know who has time when these middle market companies, and a lot of these companies have, the Pareto principle. 80% of their business is coming from 20% of their customers, right? At the end of the day, I don't. Every business owner should just insure those, the larger limits. Okay, here we go. In case something happens, in case the Sherwood Foods happens, where you take a look at going, hey, what would happen if he didn't pay me? And here's evidence, BKWIRE's evidence. It happens every day. I remind people, hey, it's going to happen tomorrow, it's going to happen the next day, and it's going to impact 2,000 companies every day. Every day we can take a look at it, and this is good. And every company should have BKWIRE just saying, okay, who's getting impacted right now? Who's getting affected? And you can really basically see what's going on. And a lot of basically like savvy companies and savvy sales guys can take a look at it, because right, a large loss happens and you start seeing these losses and they can't recover. It may be a good time to strike and make an acquisition, maybe be a good time to strike and going, hey, Matt, you may be a competitor of this guy, but did you know he just took a $400,000 loss and he may have trouble servicing you now? And you'd be surprised where you can use this information in basically every day that's in BKWIRE.
Yeah, realistically, I don't know many companies that can take a 400K loss and structure themselves. Everything's fine. Let's be honest. It's a lot of freaking money.
Yes. Yeah, but we hear it every day. It's cool. It is what it is, right? I mean, but
Yeah.
again, it's just like things happen, and you know, you got to, you know, as a business owner, you take risk. That's it. At the end of the day, and that's hard for sometimes you to tell your story back to underwriting, saying, hey, this is what's going on. I've been on those calls, like, hey, why didn't they stop doing business with Sherwood Foods? Well, the reason why is because hey, it's a main cog in their system. I mean, you just don't shut them off and saying, "Hey, buy $50 million in sales." It doesn't work like that, and it's
Absolutely.
just it's a horrifying event. And when something like that happens, it really shakes up the whole sector, right? And again, we don't do business like I said. Most sales guys walk in the door and they want a deal, and you got to think of all the things that happen. I mean, commissions given out, right? At the end of the day, sales guy, you got to get payment from your customer. Then you got to turn around. You're buying stuff from your supplier, renegotiate deals. You may have to get a bank line of credit on all on a new sale, and that's why it's so important. I don't, you know, understand like small tools like this where now we can see some things and now we can insure some things, and you're probably paying no more than 0.2%. It's a no-brainer to me, right? And it's no brainer to us because you know what happens is they don't see this data. They don't see what usually happens, right, Matt? A loss has to occur or something bad has to happen, and going, we're not doing that anymore.
Yeah, because everyone's business is fine until they take
Yeah,
that 400K loss, and then
yeah,
it's, by the way.
yeah,
um, I like to think about it. It's a common perception that it's sleep insurance, and you think about the quality of sleep in your personal life, and once again, the quality of your business structure the same way. If you make a small investment like you would for an actual like sleep, like a
yeah,
CPAP or something along those lines, you're so much more productive in your operations.
yeah. I was just at a major event, and it was like, and somebody asked how many of you guys get financials from your customers, and it was shocking to see how many people don't get financials and rely on these reports that you know both of us know are probably, you know, maybe 20% accurate. I mean, seriously, at the end of the day, and again, when somebody walks into your office and says, "Hey, we have $1 million deal here," it's just like the first thing I tell, and I get involved a lot of times. I ask the salesperson, "Where do you get it from?" And sometimes, oh, I've been working on this account for a while. Then I get others that say, I just got a phone call, right? I just got a phone call for this deal. Okay. Well, we're going to look at this deal a little bit differently, right? And there's a threshold, but a lot of times, as you know, and I know you have a lot of good clients, and you know when Euler Hermes needs or Allianz, I'm sorry to say it correctly now. When Allianz needs the information, I mean it's now you share that information with the insured or basically the supplier and saying, hey, this is what we got on these guys. You check your D&B and everything else, and it says their high credit's $50,000, but you want to give them $700,000. I see that on a daily basis. And there's companies without credit insurance that just do it, right? And then, you know, your process is basically, hey, this is one of the greatest things is, you know, the insurer can tell, hey, our basically credit insurance carrier over there, Allianz or Euler Hermes, needs financial information, and they're going to contact them on behalf, and they can send the NDA, and now you have something going, right? At the end of the day. And you get that information, you underwrite it supposedly objectively, right? And then all of a sudden, hey, this guy can get a credit limit, or now we have a process, okay? So I mean, that's one thing. Like I said, I wish every company would do that. I wish more companies would purchase trade credit insurance instead of purchasing a D&B report and underwriting that information themselves. Because now you can see with BKWIRE, and this is why we did it. Back to that earlier question, why do we do this? Is because the B2B sector is not getting this information. The B2B sector is not getting this information, and every day our company calls these companies that take hits, and they have no idea they got impacted by a bankruptcy.
Yeah, it's a common topic. It's, hey, how can we predict bankruptcy from happening? And of course, you're behind the scenes, as you mentioned. So, and that's really where trade credit comes into play too, as far as predicting this is about to happen. When can you make changes to your business operations before you're hit? I think that's a common conversation we have quite a bit as well when because we're after the fact. Hey, if you know you get hit by a bankruptcy, oh, I didn't know. I'm like, oh wow, well let's talk about some proactive measures you can take. I think it's pretty critical as well.
Yeah, and I think, like I said, you have a few guests on here, and I think trade credit insurance from financing through other avenues, sales expansion, is very valuable. And I mean, there's a plethora of trade credit insurance carriers out there besides Allianz. And again, there's different types of coverage, and I highly recommend, like I said, everybody take a look at trade credit insurance, just due to the fact that the losses are piling up right now. And again, my firm belief is nobody goes into business to go bankrupt, right? At the end of the day,
Yeah.
it just, but it happens, man. It happens every day. And there's some sectors, and what, like I said, there's companies right now. You can just imagine the guy's been around 20, 30 years and now gets hit. He takes a loss. It's just like, okay, it's just like he's done. A lot of these guys are done. They're done, Matt. It's a different, everything's different now. We talk about that. It's just like nobody wants to return phone calls. Look at, we work at home, and there's just a lot of fundamental things that aren't correct right now. And I think everybody should go work in the office, if you ask me, and saying, okay, so you can take a look at some things a little bit differently. But right now, it's a really interesting time with the bankruptcies. Yes, they're up, but it's the who's going bankrupt right now. The companies are larger going bankruptcy right now. The losses are larger right now, and I think, right, Matt, I think you guys are seeing claims right now. There's claims coming in right now.
Yeah, I'm looking at a report right now breaking down the industries, and it's past due reports, things like that. That's proprietary data, and typically that's something that those credit reports won't necessarily showcase. And again, this comes into the perspective of having data that's actually financially guaranteed versus just providing data aggregation. And those credit reports have their place, but where's the incentive for them to be up to date and correct in the data they provide? So I do think it's helpful to have your platform, if you are hit, in combination with the trade credit insurance policy. And ultimately, I think we can both speak to ourselves in the way we operate in business. We're here to provide support. We have big networks relative to different providers. And if ultimately the goal is with all of our interactions to make sure we can provide support appropriately. Anything in closing, James, that you
Yeah,
want to bring to the table?
yeah. Thanks, Matt. I appreciate it. We have some large clients that use our platform, such as Coca-Cola, Uline. And the reason why they're using our platform, not only for the bankruptcy information, but this was just an unbelievable. The watch list is, we can put any company on our watch list, and basically, if they get impacted or hit by bankruptcy, they get noticed, and they want these notices. They can react. They can react when something happens, when these companies get hit, and now all of a sudden they see a large loss. This is information they've never gotten before. And, and I think this, Matt, is a lot of these companies prior to BKWIRE, and there's other, like I said, there's other services out there, but we really focus on the unsecured creditors, and we focus on price because, number one, a lot of companies, when we did our focus group, they gave us this great price. And again, we think people should be paying $1,000 a month, but that's not really realistic. In our membership start at $99 a month. And when they take our information and look at the information, and I know, and with AI right now, it's just like, you got to imagine, right? If all of a sudden one of your largest customers took a huge loss, this information is not being shared in D&B or any other mercantile basically report. And they're not calling you and say, hey, Matt, I just lost $700,000 today. Hey, just to let you know, I want to make you feel better. And like, immediately, you'd want financials from me. You should want financials from me. Companies aren't doing that. So this is all public information. We just basically aggregate, make it very easy, make it very sortable for companies, make it easy to follow. In each one of our bankruptcies, like, you get the petition, You get basically the creditors matrix. You can move things in a watch list, but we made this really, really easily accessible to everybody.
One cool thing I like too is the filters you have. So if you go on the corporate bankruptcies, I love this feature on the platform. So you see on the left-hand side, you can look at Chapter 11, Chapter
Yep.
7,
It's
and the
great.
various filters you can look at. So it's really, you go through various web resources, a bit cumbersome to find the information.
Yep.
It's really sharp. You have those tools from a filter standpoint. Every level has that. So easy, quick, to your point, to get the data you need or desire.
So I really appreciate that. We actually, with our focus group and like Ryder Logistics, they're great in here. They tell us about a little bit more about sub chapter 5, where literally 99% of these companies go chapter 7. And there's no basically unsecured creditors committee. So a lot of this stuff, like I said, a lot of companies, let's go back on time, right? Time. Your client that you basically try to buy an insurance policy. I mean, you now gave them something with Euler that you can underwrite something literally in probably 10 minutes if needed, right? I mean, at the end of the day, they could go throw it through an online system, get approved for $500,000, and hey, off they go, right? Well, BKWIRE, hey, we deliver all the bankruptcies, everything, right? 5 minutes. And that's where, we start looking at some things. And like I said, I think companies want to be efficient and streamline some things. Well, credit should be the number one in how you onboard people. And with our tools and your tools, like you can basically, hey, help that middle market company saying, hey, we're going to look at a $600,000 credit limit, which in essence, if you're doing it the right way, you should be asking financials, which I know you're not. Right? Probably 90% of companies aren't asking for financials. Then after that, I got to underwrite it. Then basically another 90% of companies don't have, the credit manager that looks at the financials correctly, right? I mean, at the end of the day, then it's just like this may take 2 weeks to onboard a client. That's not acceptable to being a sales guy. Because if I'm a sales guy, I want that done now, right? Okay, at the end of the day. And so with the trade credit insurance, BKWIRE, I mean, these are some of the tools that companies use, can streamline things very, very quickly and basically get notified if their network is impacted.
Yeah, and I think in closing, I thank you so much, James, for jumping on and discussing this amazing tool you have. I utilize it on a daily basis, and the biggest emphasis is the value provided for that simple price of just $99 a month. And I do believe we do
For
have
now.
he will offer a free trial for
Yeah.
anyone that wants to check it out.
So Matt, really quick, one last plug. Hey, all your clients, like I said, for you doing this, 7 days, no payment needed. They have full access with everything.
Wow, I appreciate that, James. So look at the link for BKWIRE on the LinkedIn post. And feel free to reach out to me or James if you have any questions. We'll be happy to address them with you specifically. Thank you, everyone. Again, Cashflow Chronicles. Just hit the subscribe button.